Welcome in, everybody. This is Charlie Castro. I want to thank you for joining me today on our latest YouTube video. We're going to be talking about some very significant things today, so I hope you can hang with us. This is going to be a short 30-minute video today. We're going to be talking about some changes in the market. If you have a pen and paper handy, you might want to grab that and jot down some notes. This is what I would consider to be one of our most a video I would encourage you to spend 30 minutes and take a look at. There's some things that we've been seeing in the market over the last several months that you need to know about. So we're going to talk about some shrinking inventory, and we're going to be asking you to adjust your buying habits in certain ways. Most of you that are getting this video today are on our buyers list already. If you're not, we can talk about how we can get you on our buyers list. But most of you are already on our list. You see our list that go out each week, and there's some things you need to know about. So that's what we're going to be talking about today. Now, what we're seeing right now is a change from within the selling community. What I mean by that is we work with a number of vendors, whether it be bank vendors, providers of bank-owned foreclosed properties, or whether it be private REO vendors, REITs, real estate investment trusts, small funds, that sort of thing. But we're seeing a distinct change in the selling community, and it is having an impact on your ability to effectively buy properties. That's what we're going to talk about today. These are changes that you need to be made aware of. So please, again, I'm going to do this in 25 minutes. I'm going to promise not to be boring. And just hang in there with me. There's some good information to pass along to you. First of all, we want to make sure that you're on our mailing list. Now, if you're on our mailing list currently and you're watching this video, there's some things you need to know. First of all, we have over 100 buyers on our buyers list today. And as you know, every week we send out multiple lists, both bank and private, depending upon what you've requested. What you need to know is simply this, is that we're going to start paring that list back. As the market changes, we understand that not everyone is in a season of buying mode at the moment. And so consequently, we have one full-time employee, and all he does is send out lists each week to all these people. So we're going to be paring that list back. So we want to make sure that you're on our list. We want to make sure what you're looking for in terms of markets that you're looking in. We want to make sure that you're either getting bank and or private inventory or a combination of both. So we're going to be doing some changes to that list. I want you to all be made aware of that. Now, you can expect some subtle shifts in our protocol. We're going to talk about that today. So again, it's very important. Some things are changing, as I mentioned earlier. We're going to talk about that, but some things are going to change within our operation as well to reflect those changes that we're seeing in the marketplace. So we're going to see some changes in protocol. Hang with me. We're going to talk about that as well. Now, for the last couple of weeks, we have seen this sort of shift, and we could see it internally here in our office. We knew that the inventory was getting smaller. We're going to talk about that. We knew that it was getting more difficult to hit the asking prices that our sellers were looking for and what our buyers frankly wanted to pay. I mean, there's still a mentality out there that you can offer 40, 50, 60% of an ask price and be able to acquire that property. And in the past, that was true. It's not so true anymore. So we spent the last few weeks looking for periodicals, things we could find online to sort of share with you, to sort of give you an idea of where we're at in the market. And I frankly just found this one 2 days ago. I found this on Thursday, May 18th. The source is CoreLogic. I pulled this article off. I'm going to share just a little bit of it. If anybody wants the whole article, a copy of the whole article, I'm glad to send it to you. I'm just going to paraphrase some of it, but there's a few slides here that really stuck out at me, so I'm going to share those with you. The article just goes on to say the good times continue to roll for the housing market. Home prices in the United States have increased on a year-over-year basis for, check this out, for 62 consecutive months. 62 for over 5 years, we have seen a housing market continue to increase year over year. National prices are expected to keep rising through 2017, so the forecast is still prices are going to continue to go up. Some states are witnessing stronger appreciation than others, but that's always the case. I'm going to share some of that with you. With a forecast increase of almost 5% over the next 12 months, the index is expected to reach the previous peak during the second half of this year. So by the second half of this year, we're expected to be at what the previous peak was before the crash. These are all things that are important, by the way, and I'm going to illustrate to you why these things are important in a few slides. You'll see where I'm going with all this. It's just important to know this is the market that we're in right now. Again, this came from CoreLogic. Prices in more than half the country have already surpassed their previous peaks. Almost 20% of the metropolitan areas are now at their price peak. So they're already there. National prices growth is gradually accelerated over the past half year. So the market continues to climb up. Now check, this is really interesting. Rent growth for single family rental homes has solely decelerated over that same period. Now I was talking to a colleague of mine a few days ago. I spent a good part this past week talking to all of our contacts, whether it be bank contacts in the industry or whether it be private vendors. We had a number of conference calls with our vendors trying to get to the bottom as to why we're seeing these changes. But interestingly, one of the things we learned was that the fact is that if you think about it, for the last 10 years, you've had people like Blackstone and Havenbrook and BuyPD and all these major funds that were out there buying up all this single family stock and turning them into rental portfolios. So now what do you have? You have a plethora in many markets of rental properties, more rentals than you have home ownership. And therefore, the rental market is actually decelerating. So as you're looking to build your rental portfolio, it's just kind of uncomforting to know that as you're doing that, I wouldn't say in all markets. I mean, I live in California. California, we're a nation unto itself. Nothing seems to affect the California market. But in most other parts of the country, if you're building a rental portfolio, it's good to know that rental prices have started to flatten out a little bit. I wouldn't say that this is saying if they're decelerating. What we're actually seeing is there's just so much rental property out there that they're just starting to stabilize a little bit. Now, the top 15 recovery markets. Now, this is what drew my attention to this particular article, and I'm going to share this within a few slides. But only 2 states failed to post home price appreciation in March. And that's Alaska and West Virginia, not exactly 2 hot spots for investment inventory, obviously. But 15 states managed to make new highs. Let's take a quick look at the 15 states that experienced the strongest moves. Now, these 15 states here really grabbed my attention, and when you see these, you'll understand why. So these are the top 15 recovering markets in 2017. Now, for those of you that have been on a call with myself or Matt over the last 12 to 18 months, especially as it pertains to bank property, when somebody would call us up and say, hey, we want property in California or Arizona, New York, Colorado, the 5 boroughs in New York specifically, or in some markets in Texas like San Antonio, Dallas, and Houston, we would just simply say if you're buying in those markets, you're buying at or above market value. And so still to this day, when people call us up and say, hey, I got people looking for REO inventory in California, and they're looking to buy at 70% of value, I mean, the conversation sort of stops right there. And that pertains to Arizona. It pertains to Nevada. It pertains to certainly Denver, Colorado, who joined that illustrious group of states about a year ago, and the 5 boroughs in New York. If you're looking to buy there, you're going to buy at fair market value. That's just where the market is right now. But here's what captured me about these 15 states: California, Alabama, Illinois, Nevada, Hawaii, Florida, Michigan, New Hampshire, Arizona, Rhode Island, Idaho, Colorado, Oregon, Utah, and Washington. Now, you notice I highlighted some of those in red. I don't consider to be Hawaii, Rhode Island, and New Hampshire to be investment markets. I don't think we've never sold anything in any of those 3 states now that I think about it. And I don't think I've had very many people say, I'm looking for REOs in Hawaii or REOs in New Hampshire. Those states obviously recovered just through the fact that home ownership. Hawaii obviously is a destination spot, so we could all understand that. But those other 12 states, look at those 12 states. Alabama, how much have we sold there? Illinois, Nevada. There's a bunch of you right now that are looking at the string going, oh yeah, those are my markets. That's where I buy at. Absolutely. Michigan right now is the hottest state in the country, number 9 in recovering markets right now. All these markets are becoming harder to get, and for a whole bunch of reasons that we're going to talk about. Now, what impact does this have on the investment community? It has a huge impact. I'm going to share some stories with you first. One of the things we were told this week on a conference call with one of our larger vendors, and you've seen their list for the last 2.5 years for the most part, they told us on the phone their investors now see themselves being in a place that they'd hoped to be all along. This is the market that they've been hoping for all along. This is a market where they told us we're getting almost 80% of our asking prices for these low end, meaning under $100,000 REOs. They're getting almost 80% of their ask price. And my response was, well, you must be referring to the fact that you're now listing some on the MLS, and I'm going to talk about that, or you're selling on a land contract. They said, no. We have investors now willing to pay up to 80%. They had an offer of almost 90% of asking price for over 300 properties in Florida. One buyer, one fund, 300 properties, over 90% of asking price. Now, to many of us out there, that sounds nuts and crazy, but when you look at where the market's at, it makes sense. So if you're a buyer, a wholesaler, a broker, an investor, this is what you need to know. Number one, inventory shrinking. I'm going to share that in a few slides here. Prices are rising. That's obviously directly related to the fact that inventory is getting smaller. Inventory gets smaller. Sellers are more likely to hang on to what they have and look for more for it. Sellers are less likely to sell at deep discounts. Now, there are still places you can get deep discounts. You just have to pay attention to that. That's what we're going to talk about today. There's still ways to make money, and there's still ways to buy under market value. There's still ways to get great deals. So you just have to know where to look. That's what we're going to talk about. Competition for the same inventory is at an all-time high. I'm just letting everybody know that you just need to understand that you're not the only ones bidding on properties. I get offers all day long in this office here. And Matt and I submit these things typically within 30 minutes of the time we get them. Sometimes we get counters back in an hour, sometimes 2 hours, sometimes a day or two. But the fact of the matter is you're seeing competition big time. If you're making a bid on something, we're going to talk about ways to combat that. But if you're bidding on something, you need to understand you're probably not the only one right now. There's not as much inventory, but there's just the same amount of buyers out there looking for deals. Bank pricing in most cases remain at or above fair market value. Now, there's some exceptions. As you see, I put there ... There are some exceptions, and I'm going to share that because I don't think a lot of our bank buyers understand fully where to look for those deals at. We're going to talk about that. And private vendors now, in some cases, are looking for 70 to 80% of their asking price. You just need to know that. I know it's painful to even think that that's the case, but that's just the case. Now, that does not pertain to all lists, which is the reason why you need to read the protocol on every list we send out. But we're going to talk about that in more detail. That's not the case from every seller's perspective, but it certainly is now in some. Privately owned REOs is the place that in both 2016 and 2017 our buyers found the best deals to be. The bank stuff just became overpriced, especially if you were buying in those 5-6 states that I mentioned. But even if you were buying in the Sun Belt or the Rust Belt, or not the Sun Belt, excuse me, the Bible Belt or the Rust Belt, even in those states there, you were seeing prices at 70 to 85% of fair market value, and it doesn't leave a lot of room to make money if that's what kind of percentages you're buying at. But just as an example, Matt and I just added this up a couple of days ago. Only 6 months ago, we were getting anywhere from 5,000 to 10,000 private REOs each month from a variety of vendors. Some lists could be small, 25 or 20. Some lists could be larger, 1,000, 12, 1,500. But 5,000 to 10,000 was what we were receiving every month. That was the amount of inventory that we saw that was new each month. We counted it up. We're getting about 2,500 now. So we're getting 75% less in some cases than we were getting just 6 months ago. That's the amount of property we're seeing. I'll give you a good example. The vendor that we started working with, and many of you bought from last year, I want to say March or April of last year, when we first started getting their list, they were anywhere from 1,000 to 1,500 new REOs every month. Every month, beginning of the month, I got a new list. It was grand. This month, it had 35 properties on it. And it was frankly stuff that they've been just recycling for many months. Matter of fact, I don't even know if I sent it out this month or not. I don't know if it was even worth it. But that gives you an idea of what we're seeing here. Now, and this is not from a shortage of vendors. We are now on most every major vendor's marketing list that I know of. If there's a major vendor out there selling REOs, I've gotten in contact with them somehow through somebody. So we have more vendors providing less inventory. That gives you an idea of what you're seeing in the marketplace. Now, these do include REOs, non-performing and performing notes, as well as occupied properties. The interesting part is the one thing we have seen a shift towards has been occupied cash flowing properties. We do have some inventory. I very rarely advertise that. It's just in-house stuff. If you have a need for that, let us know. But also notes. If you're looking for non-performing notes, remember that's what that's what the hedge funds are doing now. For the most part, the guys that used to be buying single-family portfolios or single-family investment property, they're now looking at notes because notes you can get a better deal on. You can still buy notes at 55 to 70% of the unpaid balance. It takes a little bit of work. Got to have some infrastructure. You got to be able to turn that note into an REO, but it's where you can get deals at. So we don't spend a lot of time advertising that, but if you're looking for notes, let us know. And of course, we sold some bulk packages for as low as, and I said 35 here, I said as low as $3,500. That's really not true. We've actually sold some of these portfolios have been as small as little low price as even $1,200, $1,500 a door. So there's all kinds of inventory available in those ranges, but generally speaking, what we're seeing right now in the REO space, we're really seeing more of the $20,000 to $75,000 property, a little better quality property. I think a lot of that stuff that we were selling for under $10,000, I think most of that stuff we've blown through. I'm not sure that's going to be coming back either. Now, protocol on private REOs is really important, and there's going to be some changes that we're going to talk about here real quick. First, the first thing you need to know is we need to have you on our list. Matt's email is preauctionbids@gmail.com. If you're not on our list, I'd encourage you to write that email address down and send Matt a request. Tell him what markets you buy in. Tell him what type of REOs you like or what kind of bank properties you want to look at. The key right now, if you're a buyer, is you need to be looking at everything that's out there because with inventory becoming more narrow and more difficult to identify and find, you really need to be paying attention to all these lists. And I'm going to tell you where you can find the gems and the really good bargains in a few slides. One of the key things on all REOs, whether it be bank property or whether it be privately owned REOs, is your due diligence has to be done first. Do not submit any bid on any REO unless you've done your due diligence. None of these vendors like giving out contingency periods of 10 or 20 days. If you're buying an occupied property, that's standard. Obviously, you get a contingency period. You look at the rent rolls and the leases, and you go do an inspection. That's all fine. But when you're talking about a low-end REO under $100,000, you're not going to get a contingency period, and the banks don't give anybody a contingency period. If you bid with a bank and you win, you win. You get the property. You're going under contract. They expect earnest money in 48 hours. So if you haven't done your due diligence, don't bid. You can actually get in trouble from banks if you do that. So be very careful with that. Unlike bank property, we can usually get you lockbox codes. So if it's a private REO, we can get you lockbox codes. I'll talk about banks in a minute, but right now we're focused on private REOs. On private REOs, we can generally get you a lockbox code, and that's generally where you want to start. You look at the list, you identify the properties that interest you, you send us a lockbox request, we get you the lockboxes, you go out and look at them, you do your due diligence, see what kind of liens maybe hanging on them, you do all of that, and then you submit your bid to us. Most of these will have small liens, no loans, and they're typically not going to find a loan. The titles will be clean, but there's going to be some liens, typically tax liens, water liens, utility liens, that kind of stuff. And understand that the buyer is responsible for those liens. So you want to make sure. Now, understand something. If you're looking at a property and you're going to offer $5,000 on it, and then you go look it up and you see that there's a $1,500 lien, there's nothing wrong with you coming in and saying, I'll give you $3,000 for it or $3,500 for it. There's nothing wrong with it. They'll take that into consideration. But the seller on a quick claim trade is not going to pay the liens. That's up to you to pay the liens. You got to figure out what those liens are. Now, this is very important. Please be sure to read the protocol provided on each list. I spend at least 30 minutes on each list that goes out, making sure that you know, to the best of my understanding, you understand the seller's price expectations, what their protocol is, how you get in, if you can get in, how they want to close, is there a warranty deed available, is it just quick claim only, is it a combination of both, or it's either or. These are things that I take the time to write, and that's where it's especially important. It's especially important when it comes to the price guidance. The price guidance is the most important thing, because every list, see, what I don't do, I don't believe in taking chunks of lists and cross-pollinating them and sending you out a list of properties from 4 different sellers, because when you do that, the reality is this: each seller has their own expectations. So what I do is you get a list with just one seller, and I can say, on this seller, this is what you can expect. This is what we've experienced them to take. This is what I know I can negotiate for on your behalf, and so on. Conversely, it's really important because, for example, some of you have learned just recently, we had one list that I was advertising at 50 to 70% of fair market value. When that list finally hit the market, the seller was coming back to me saying, Charlie, I'm getting 75, 80% offers on these. And some of you offered too low, and you didn't know it. You thought you could come in at 50 or 60 or 70%, but the reality of it was the market's driving those prices up. So we really do take our time to let you know what it's going to take to acquire a property. So it's really important that you read that protocol on each sheet that goes out. Now, how do we close? Now, this is really important because this has changed a little bit. It used to be on lower end REOs, like under $10,000, nobody would do a warranty deed. It was just quick claim only. And in some cases, that's still true. I mean, if you're offering $5,000 on a property, they're probably not going to do a warranty deed. But now, on most cases, we can do a warranty deed, but this is what you need to know. When you submit your offer, we're going to ask you for a closing date. And why is that? Because if you come in and make an offer, let's say the asking price is $25,000, and you come in at 15, and you say, I want a warranty deed, that's one thing. If you come in and say, I'm offering you 15, I'll do a warranty deed and close in 5 days, you have a much better chance of getting 15 offered. If a seller really knows he's going to do a warranty deed and it's going to take him 10, 15 days, 2 weeks to close, he's more likely to want to leave that property on the market and wait for someone to offer him a quick claim, or just simply say, hey, when you're done with your due diligence, step up and we'll accept that $15,000 offer. Otherwise, your counter is liable to be, instead of $15,000, liable to come back at $20,000 or $22,000. So the point being, if you want the best deal, the sellers are more motivated to offer lower pricing if it's a quick claim, fast close. Now, many people aren't comfortable with a quick claim. I totally understand that. It's not your traditional way that many REOs are closed. However, what you also need to understand is the buying community today is, in many cases, now conditioned to understand, to get the best deal, they got to do quick claim, which means they got to do all their title work first, see if the title's clean. They got to make sure that they got to know what the liens are, encumbrances are against the property. They have to do all that first. Once they've done that, then they submit their offer, and then they just go to quick claim and close, and they claim the deed up later and turn it into a warranty deed. But what I'm trying to project, and it's a very important part, is that if you're going to do a warranty deed, it's always going to be higher priced. They're always going to be more firm on their pricing if it's a warranty deed. Now, When I said subtle changes, here's one of the subtle changes. For those of you that know how we operate on the bank side, you know that when you submit a bid, you submit your offer and then your highest and best offer, meaning, the asking price was $50,000 and you came in at $40,000, but you know that your pain threshold is 45. Well, you'll submit the offer at 45 with your highest, or excuse me, your offer at 40, and then your highest and best being 45,000. Now, why are we asking for that on all REOs? Here's the reason why. And for those of you that are listening to this and have experienced this in the last few weeks, you'll know exactly what I'm talking about. We've seen multiple offers in the last few weeks that we lost because somebody came in low, offered, 20,000 under the asking price, but they knew they could go up another 10. They were just trying to squeeze another 10 out of the deal. Well, they lost the deals because I didn't know that they were willing to go up. And I had one buyer in particular who I feel terrible for, who had about 5 or 6 properties in Indianapolis this past week, who came in low, thinking that they can get them that low, probably because we told them we thought they could. And they came in low. Somebody came in higher. They then came back and said, no, I'll go up. I'll go up. I'll go up to this. But I think for the most part, most of the offers that this buyer made, I'm going to lose most of them because I didn't come in fast enough. And so what we're going to ask you to do is, same on a bank property as on a private REO now. When you submit a bid, if you come in at 5,000, but you know you can go 7,500, give us both. We're not going to spend your money if we don't have to, but I'm just telling you that you're going to lose transactions, you're going to lose deals if you try to squeeze that few extra $1,000s out knowing you could have gone up. It's very, very important. Now, I'm shifting gears now completely to bank property. I just covered what private REO market looks like currently. I hope you grasped most of that. I know it's a lot to swallow in 15 minutes, but I hope you got most of that. But now we're going to talk about bank property. So it's distinctly different. Now, the reason I'm doing this is because I don't think most of our buyers right now understand that on the bank inventory, there are deals. And I'm going to start with saying this. We did a YouTube video back in February, and on it I said we were told by all 3 major bank auction houses, Auction.com, Hudson Marshall, and Realty Bid, all 3 told us the same thing. The banks were concerned with getting inventory stuck on their books in case something happens in the market. Now, yes, this is directly correlated to what's going on in Washington, and I'm not going to go there with that. I'm not saying it's good and or bad, but the general consensus in this investment industry is simply this: there's so much uncertainty that people just don't know what to project. For the last 7, 8 years, you could have projected every year what the next year was going to look like. The interest rates are going to stay low. Prices are going to continue to climb. Right now, there's a lot of uncertainty, and what the banks don't want to have happen, they don't want to have happen what happened in 2008, 9, and 10, which is the market crashes, and they've got oodles and oodles of what they called shadow inventory on their books that they couldn't get rid of, and ended up selling them to hedge funds at 40, 50, 60 cents in the dollar in these large multi-million-dollar tapes. They don't want to do that again. So they told us, they said, you're going to start seeing better bank pricing. So let's talk about that. Hudson Marshall has been taking less than the target bid now for several months. I'm going to show you some examples. Realty Bid, and I didn't know how to word this, but Realty Bid now gave us what the banks will accept. They've basically said, all right, we're going to tell you what banks will accept what. It's not just the reserve price anymore. Now, if you don't know what that means, all banks set what they call a reserve price. The reserve price is the price the bank sets and says that's the price we'll take. If you come in $1 below that, they won't take it, believe it or not. That has been how it's worked for 18 months. And for those of you that bought bank property, you know what I'm talking about. There's no negotiating those prices. If their price is $100,000 and you came in at 99, you're not going to get the property. That's changed, and I'm going to show you how that's changed in a second. Now, with the exception of Auction.com, if you're wondering why you haven't been seeing Auction.com lists, it's because they have stuck to their asking prices. And their reserve prices that they've set are, in most cases, at market value. Not all of them. I mean, you can look through a tape, and their tapes are the largest, anywhere from 3,000 to 10,000 properties every week. They are by far the largest tape. But at the moment, we're not getting any discounts. And to compound things, our VIP rep is on maternity leave until she gets back. We just don't have any insight there how to get anything out of that market that makes any sense price-wise. We've been expecting to see a large group of HUD inventory be released. We were told that in February that we would be seeing that this year. I'm talking about large groups of HUD properties that be discounted. We've not seen that yet. We still think that we will, however. Now, some examples for you. Now, what I've done here is I've taken a screenshot of what the Realty Bid list looks like. Now, the Realty Bid list comes to us religiously every Monday morning. My VIP rep sends it to me every Monday morning. It's only a couple hundred properties, usually 200 to 300, but it comes to us every Monday morning. We get it out usually by Tuesday at the latest. I'm drawing your attention to the column that says notes. Now, you all know this list is much longer and thicker and wider and deeper than what you're seeing on the screen. I'm just giving you an idea of what to be looking for. Where it says notes, you probably know that with RealtyBid, we cannot send out the reserve price electronically. We can give it to you. We have the bank's reserve price. We can give you that price, but we can't send it out electronically. They don't want us to do that for a variety of reasons. But what we are going to leave on, we're going to leave on their notes, which says, for example, seller will look at offers within 10 grand, or sellers will look at offers within 15 grand. Now, why is that significant? The RealtyBid list is generally under $100,000 properties. Now, there's some that are over that. There's, the $200,000, $300,000, $400,000 properties in there, but for the most part, it's under 100 grand, which means you're saving at least 10%. However, a whole bunch of the RealtyBid stuff is under 50 grand. So if you got a $50,000 property and they're willing to take within 15,000 of that, you're talking about a solid 25% discount. Now that's a discount. Now, why is that valuable? You want to understand one thing. The bank properties are going to have one distinct advantage over the private REOs, and here's how it goes. Bank properties is foreclosed property. There was a homeowner living in it up until 30, 60, 90 days ago. So in theory, you've got a better conditioned property. The water's running, the electricity's working, it's a functioning house. Where the private REOs are generally bought at tax sales, or bought at the courthouse steps, or they're bought at a number of different ways, and they can be vacant for up to 2-3 years. I mean, a lot of the stuff that you see has been, and many of you know because you go to look at them and get your lockbox, you go and say, Charlie, this has been vacant for 2 years. The bank stock is a better quality house. So let's just say, for example, you're buying in Detroit, which is one of the hottest markets in the country right now. You're buying in Detroit. You see a property in the RealtyBid list. It's $35,000. You can get within $10,000. That's you're gonna pay $25,000. You say to yourself, well, man, in Detroit, $25,000, man, I can get that for 10 or 15 or 12. Well, that's true. On the private side, you can, but remember something, you're getting a better quality house too. You're not going to have the rehab work you're going to have on a bank property that you're going to have on a privately owned REO that could have been sitting there vacant for a number of years, if not longer. So that's what you want to be paying attention to. So all you really have to do when you get the RealtyBid list is look through it, identify the properties that you may have interest in. You can see how much the bank's willing to discount it. We can give you the reserve price. You can set your bid. If you come in, let's say it's a $50,000 property, and the bank's willing to accept or look at offers within 10,000, you come in at 41, 42, 43. Depending upon the market, you got a good shot of getting that property. So RealtyBid is now offering discounts. Pay attention to that column that's entitled Notes. Now, Hudson Marshall. We've been getting really good deals on Hudson Marshall, and our batting average on Hudson Marshall right now is extremely high. And what I mean by that is simply this. When we make a bid on Hudson Marshall, we get the property about 40% of the time. Now, if you've bid on bank property before, you know that's really high. Excuse me. But we get some really good buys in this, and our batting average in picking these up has been really, really strong. So let me draw your attention to a couple columns you want to see. We're starting to see lists go out from Hudson Marshall that says starting bid that the seller will consider. That's the bid you're seeing right there in the white or the yellow. And then in the green, it says target bid, including the buyer's premium. Now, you'll notice there that, for example, on the house in Anniston, Alabama, that the target bid's $5,000, but they'll start listing the offers at $600. Or if you slide down a little bit, the one on Monitor in Bakersfield, $71,000 is the bank's target bid, but the starting bid they'll consider is $40,000. Even bigger discount, you've got Visalia, California, which is obviously a California property, where the bank's target bid is $876. You can buy that for $675. They'll start bids at $675. Now, are they going to accept $675? Probably not, especially in California. But the point is there's room there now to negotiate. And then on some other ones like you see in Connecticut here, Connecticut, another market that's probably not a big investment market, but submit all bids on those. They'll listen to anything on those. Whenever you see, and I put a note down at the bottom, whenever you see a Hudson Marshall list that has that column that says starting bid the seller will consider, that means there's room there. There's room to negotiate. The reserve price is not set. The second thing you want to pay attention to is just open up the spreadsheet and look for anything in yellow, because yellow means that they are aged or low value assets, the seller's motivated, and they'll listen to all bids. So on those Hudson Marshall lists, you can get really, really, really good prices if you know where to look. Some friendly reminders in bidding on either bank-owned or private REOs. Do not bid until you've done your due diligence. I talked about that. It's extremely important. Bid response time can be anywhere from a day on a private seller to 14 days from a bank, and that's really more like an hour with a private seller to maybe a day or two. And with banks, it's usually within 6 or 7 days, but that we give ourselves a little bit of latitude there. The only lockbox codes you can get on REOs is from Hudson Marshall. Now, if you are in the business, you know how to get in. I mean, a lot of these properties are listed, and I'm going to talk about that just real quickly. I should have mentioned that earlier. If you start seeing some of these properties, even privately owned REOs listed, don't run from that. I was on the phone with someone the other day, and she said, I don't want anything to do with something that's listed. I said, well, then you might want to rethink that strategy, because the fact of the matter is, if a seller right now can put something on the MLS and sell it for full asking price to a homeowner, he's going to do it, and he should, right? You would. If you were the seller and you can get full asking price, why would you sell it at a discount? The replacement costs are much higher than they used to be. If you've got inventory, you're less likely to take less for it. So a lot of the vendors, not just the banks have always listed them, but a lot of the private vendors will do the same. But here's the key, though, to understand something. Because something's listed doesn't mean the listing agent can sell it. We have lots of people that have called up and said, hey, Charlie, I saw that Hudson Marshall property. It's got a realtor. I'm going to go buy it from them. And I said, good luck. Have a good time with that, because they can't sell it. Hudson Marshall's the broker. The MLS agent can't sell it. So, but you're going to see some of these lists, and they do this for a variety of reasons. One, they want to put a lockbox on it. Hudson Marshall can get you a lockbox if it's vacant. So if it's a vacant property on the Hudson Marshall list, you can get a lockbox to that property. As I said, we're now requesting highest and best bids on both bank as well as privately owned REOs. And finally, know that the competition is really stiff right now. Inventory is moving really fast. I tell people all the time that market for us, if you have a list that's been on your sheet for a month or 6 weeks, right, the likelihood of it still being around is really super slim. You want to be contemporary with the list. If you're a broker and you market for us or with us, you need to know that if you're getting our inventory, you need to be shuffling that inventory every 2 weeks. That's what we do. Now, we clean it out. And within every 2 weeks, if we haven't sold it, it's probably already gone. So don't bother trying to recycle it. Now, there's some exceptions to that always, but for the most part, you'll want to check with us when you're looking at a list older than even 2 weeks. Now, what we need to know, and this is important, if you want to continue to see our list, we need to hear from you. There's many of you we've not heard from for a while. The 100 people on our buyers list, obviously some of you we talk to on a daily basis. You guys are seasoned. This does not apply to you. But for those of you who hadn't heard from for a while, we're going to pare that list back a little bit. So we need to hear from you. We're going to be sending out some emails, and we're going to be sharing this video. And we're going to be asking you to contact us. Let us know what you're looking for, bank or private. Frankly, my suggestion right now, if you're a buyer, you need to be looking at every list. Bank, private, everything, because with less inventory out there, you're gonna have to look harder and be more diligent in order to get the deals that you're looking for. We need to know your buying markets. We do not send out lists in their entirety. We can't do that. If somebody calls us up and says, hey, I've got a buyer for all 50 states, we say, no, you don't. There is no such thing as a buyer for all 50 states. And if somebody told you they buy in all 50 states, they told you a lie, because nobody does that. So you need to tell us what markets that they buy in. Every large fund, if you call us up and say I represent a large fund, I can tell you, because I've worked with all of them. Every large fund will have a buying criteria sheet. They will know exactly what markets they want, what prices they want to pay, what percentage of values they're looking for. They're going to be, in some cases, they're going to tell you what the age of the property can or can't be. They're going to tell you how many beds and baths are minute. They have a buying criteria. If you don't have that, then you don't have a legitimate buyer. So don't ask for that. But if you do ask for properties in the markets that you have buyers in, we're glad to provide you with those lists. But we need to know you have legitimate buyers in those markets, and we do not want our tapes shopped on the internet. We don't want to see anything show up on Facebook that we stick out there. Please email myself or Matt directly. Now, Matt is at preauctionbids@gmail.com. I'm at charlie.castro@sbcglobal.net. I can tell you that Matt controls our database of properties. So if you want to know if a property is available, if it's a lockbox code's available, what the price guidance is on it, Matt has all that at his fingertips. You can actually get much better service if you talk to Matt. So put Matt's email address into your file, preauctionbids@gmail.com. And here's our phone numbers. Matt and I are interchangeable. If you want to get a hold of me and you can't get a hold of me, you call Matt. Matt can tell you what I can tell you. And especially if I'm not around, for example, on Monday and Wednesdays, if I'm out playing basketball and you can't find me, you can always get a hold of Matt and he can answer your questions for you. So you might want to jot Matt's number down as well. And we'll be glad to help you. So I want to thank you for hanging through this 32-minute video. I went a little bit over. I apologize for that, but I want to thank you for hanging with me through all that. There's a lot of good information there. If we can do anything for you, you got our phone numbers and you got our email address. We look forward to talking to you. And we hope that y'all have a great day. And God bless everybody.